Hi, everyone, and welcome to the third edition of our Small Business Update. I'm Mike Morello, the Chief Digital Officer for the U.S. Chamber of Commerce and for CO, standing in for our regular host, Jeanette Mulvey. Lenders are once again taking applications for the Paycheck Protection Program loans, which were part of the $900 billion coronavirus relief package passed in late December. That law allows first-time borrowers to apply and includes a second draw PPP option for some small businesses. It also introduces new rules and programs to help small businesses. Many more are now eligible for the Employee Retention Tax Credit, and others can take advantage of new grant programs as well. Today, we will be answering your questions about this new law. We've received thousands of audience questions at each of the last two small business update sessions, more than we could ever answer in an hour. So today, you're writing our whole script. We'll spend the first half of the session answering questions from the past events, answering your questions from the past events. The second half will be dedicated to questions coming in live today. Throughout the event, you can type your questions into the space on the right of the screen. We know we will have more questions coming in than we can possibly answer, so there are moderators working behind the scenes to ensure questions on the most common themes are published. If you see your question listed as pending, don't worry, they're working hard to get to each one. Now, to start today's show, I'd like to welcome Neil Bradley, Executive Vice President and Chief Policy Officer here at the U.S. Chamber of Commerce. Neil, thanks so much for joining us today. Yeah.
All right, should we dive right in?
Yeah, let's do it. Why don't we start with, can you give an overview of the programs available to small businesses right now?
Absolutely. This is a good table setter. And for those who've been with us before, we're going to pull up a couple slides that help provide a quick overview. Let's go to the first one, which outlines really perhaps the two most important programs for most small businesses: the new and expanded Employee Retention Tax Credit and the second draw PPP loan. The Employee Retention Tax Credit is a refundable, advanceable tax credit, meaning that if you are due more than what you pay the IRS actually sends you a check that's equal to up to $14,000 per employee in 2021. Businesses with 500 or fewer employees with more than a 20% decline in gross receipts in a quarter compared to the same quarter in 2019 are eligible. This is a program that's administered by the IRS. The IRS is currently in the process of updating its guidance and application forms, and you can learn more at irs.gov or by simply Googling IRS and Employee Retention Tax Credit. The second program is the second draw PPP loan. This is the loan for small businesses who have already received one PPP loan but have exhausted it. It looks a lot like the first PPP program and provides a forgivable loan of up to $2 million. Businesses that are eligible are those with 300 or fewer employees who've exhausted that first PPP loan and have experienced more than a 25% decline in gross receipts in a quarter of 2020 compared to the same quarter of 2019. As Mike mentioned at the outset, today is actually the first day, Tuesday, January 19th, that everyone can submit applications through your lender for the reopened PPP program and the second draw PPP program. So it's very timely that we're doing this today. We have another slide we'll bring up very quickly that talks about two other programs that I'm sure we're going to get to in today's discussion. The first is the Targeted Idle Grant. This is a revised version of a grant program that was created in the original CARES Act. It provides up to a $10,000 grant for a small business. Eligibility is for those with 300 or fewer employees located in what's called a new market tax credit eligible census tract. These are generally lower income areas and that have experienced a drop of at least 30% in gross receipts for a particular 8-week period in 2020 compared to a prior period. This program is administered by the SBA. The SBA has not reopened the portal to apply for these grants yet, though we expect them to do so any day now. The last program is the Live Venue Grant. This is a brand new program that's designed to provide grants of up to $10 million or 45% of the gross earned revenue for live venue operators. These are theatrical producers, live performing arts organizations, museum operators, independent motion picture theaters who have experienced at least a 25% reduction in gross earned income. This program is administered by the Small Business Administration. They've begun putting details on their website, but it's not yet open for applications.
That's great, Neil. Now, from the standpoint of what's open right now, it sounds like, correct me if I'm wrong, that the second draw PPP and the employee retention tax credit are open right now. Is that right?
Yeah, so the PPP program, the original one, in case you didn't ever receive a first loan PPP, it's now open, as is the second draw if you've already exhausted that first loan and you meet the eligibility criteria. Again, this is the program where you go through your lender. So you reach out to your bank, your credit union, whoever you do business with from a financial and banking standpoint, and find out if they're accepting and making applications for those PPP loans. The employee retention tax credit is one that you claim in filings with the IRS. So you'll want to work with your tax preparer or bookkeeper, whoever helps you file and submit your withholding taxes on behalf of you and your employees.
Gotcha. Okay, that's great. Well, from the questions we got in the last couple of sessions, why don't we dive in more specifically into some of the PPP related ones?
Let's do it.
So, is this new round of PPP retroactive to 2020 or just for 2021 expenses? And also, can it be used only for 2021? What year is it for, basically?
So let's rewind so I can understand how the PPP program works. You receive a PPP loan. The maximum amount of your PPP loan is, in general, based on 2.5 months of your payroll expenses. So the cost that you incur to pay yourself as a small business owner, to pay your employees, and to pay their benefits, like healthcare premiums, for example. So 2.5 months of that determines how much of a loan that you can receive. Once you receive your loan and it's actually dispersed to you, it arrives in your bank account, you begin something called a covered period. And the covered period is the period in which you keep track of your expenses for which you use that PPP loan for. And it's those expenses that determine whether you can, your loan forgiveness, and whether you can have your loan fully forgiven. And so the expenses for which you use your PPP proceeds for, if you're trying to maximize your loan forgiveness, as assuredly everyone is those expenses that begin on the day in which your loan is dispersed and end at a period between 8 and 24 weeks after your loan is dispersed. And you get to pick the end date between that 8 and 24 week period. So it really isn't relevant in terms of prior expenses. What's relevant is what you're spending money on once you receive your loan.
Gotcha. Okay. So it's really just fitting between that 8 and 24 week thing, and then you make that determination when you apply, right?
When you receive the loan, yeah.
I'm sorry, when you receive, yeah. Another question is, can you lower employee salaries and still receive a PPP loan?
Let me answer this two ways. In general, the goal of the program is for you not to lower your employee salaries. And so with respect to first round PPP program, and the SBA has said that they're applying similar rules for the second draw PPP program. If you reduce an employee's salaries by more than 25% relative to their prior salary, before you receive the loan or pre-pandemic, then you risk having your loan forgiveness reduced by a similar proportional amount as the amount of your salary reduction beyond 25%. So if you cut someone's salary, let's say 50%, that's above the 25%. You risk losing 25% of your loan forgiveness. There are, however, some safe harbors. If you act to restore an employee's wages between a certain period of time, or if you offer to restore their wages and they decline, then you won't be penalized. But as a general rule, the goal is for you not to reduce your employees' wages, and you risk losing loan forgiveness if you reduce wages by more than 25% and don't restore them.
Gotcha. Okay, that makes sense. Another question around PPP is, can you apply for a second round PPP loan if you have not exhausted or applied for forgiveness on your first round loan?
Okay, so two different questions there. Let's break it apart. Can you apply if you haven't for a second draw PPP if you haven't applied for forgiveness on your first loan? Yes. The operative term is not whether or not you've applied for forgiveness for your loan. The operative term is whether you've exhausted your loan. So let's take the first part of that question. You do have to have exhausted your loan or anticipate having exhausted your loan by the time you receive your second draw PPP. So for most folks who would be applying today, you got a PPP loan maybe last spring or in the summer, you almost certainly exhausted those funds, and there's not going to be any barrier in terms of applying for that second draw. If for somehow you're in a unique circumstance or you're just now going in for a first round PPP, you do have to have used all of those funds by the time you receive that second draw PPP.
Gotcha. Okay. Another kind of adjunct question is, can you apply for round two if you did not apply for the first round loan at all?
That's easy. No, but you can go apply for a first round loan. So go apply for that first round PPP loan.
Makes sense. Is there a benefit in delaying your loan forgiveness application?
Not especially. So the rules have changed because of this new law that was enacted at the very end of the year. We don't anticipate further changes in those rules. Some of the rules have made it simpler. For example, if you have less than $150,000 loan, it's going to be a one-page loan forgiveness application that you apply and process for, much simpler than if you were applying for loan forgiveness, let's say back in November. But going forward, there's no reason, once you've met all your requirements, once you're certain that you've maximized your loan forgiveness, there's no reason not to go ahead and apply for forgiveness.
Okay. Another one on expenses. Are health insurance premiums included in eligible expenses?
They are, and they're included in payroll costs. So the employer portion of health benefits, of certain other benefits, including paid leave, that you provide to your employees is included as payroll costs. And so you can both factor that in when you're applying for your loan in terms of the maximum amount, and the amount of money that you spend on those benefits for your employees after you receive your loan counts as qualified expenses for loan forgiveness. Okay.
That is good all-around information for what counts and what doesn't count. Here's another interesting one where it reads, I have personally put money into my business to pay things like insurance, rent, and payroll last quarter. Can I use PPP funds to pay myself back?
Yeah, so you can certainly use PPP proceeds to pay many of those expenses, certainly your payroll expenses, to pay your rent and utility obligations during your covered period. I suspect what the questioner is getting at is that they've had expenses before that they paid for out of their own personal funds. Now they're going to get a PPP loan and they want to pay themselves back for those expenses. And that you generally cannot do, because the eligible expenses are ones that are incurred or paid in that covered period, meaning that period that begins on the date that you receive the proceeds from your loan and ends between 8 and 24 weeks later. So you really can't go back and use PPP proceeds to reimburse yourselves from prior expenses. Now, if the questioner had a PPP loan as a covered period at the same time that they were also putting their own money into their business to help meet those expenses, then you ought to count those expenses as being paid for out of your PPP proceeds because they are eligible expenses. So if that is the circumstance, yes, but I suspect the way the questioner was getting at it, that they want to go back in time and pay themselves back, and that you generally cannot do.
Okay, it's good to know. Here's another situational question. We have deferred rent expense on the books from earlier this year. Can we use our second draw PPP loan to pay it even if it falls outside of our second covered period?
Yeah, so this is a tricky one. In short, possibly. So the way that the guidance from the SBA worked, particularly with the first round PPPs, is some of the explicit guidance said that what counts as, in this case, rent expenses, are rent expenses that you incur or pay during your covered period. So if you have a bill for expenses that includes a period before your covered period, but you pay it, let's say, the week after you receive your loan, you can generally use your PPP loan to pay those expenses. Similarly, if you incur rent expenses during the covered period and you get the bill for it or you pay it after your covered period ends, you can also count those as eligible PPP expenses. So the guidance that we've had to date suggests that you would be able to do that. I do wonder, and we'll see if there's additional guidance on this, about how far back in time, if there'll be any limitations on how far back you can go. But if you're paying, let's say in January or February, your December rent, that is clear, or November rent, that is clearly contemplated under the guidance that the SBA has published.
Okay. So why don't we shift gears and focus on some previous audience questions on other programs outside of PPP. This one is on the employee retention tax credit. Can we apply for the employee retention tax credit retroactively back to 2020 if we have not already applied?
Yes, and so this is one of the things that in the coming weeks, and really almost any day now, because we're beginning to run up against the deadline, that we're going to look for from the IRS. One of the biggest change with respect to 2020 and the employee retention tax credit is they retroactively repealed the prohibition against taking both the employee retention tax credit and a PPP loan. Now, if you had a PPP loan, let's say last spring, use that PPP loan to pay your employees, let's say through the summer, you exhausted that PPP loan by the time you got to October of 2020. But you continue to pay your employees, and you have less than 100 employees, and this will be important for 2020, less than 100 employees, and that you're paying them to continue providing services. You can go back and claim the employee retention tax credit of up to $5,000 per employee. And you'll claim that credit generally when you submit your quarterly withholding tax form, your 941 generally for most taxpayers, which you generally do for the last quarter of 2020 at the end of January. So if you're talking to your tax preparer, your bookkeeper, your payroll processor, you're going to want to talk to them about claiming the credit for the payroll expenses that you had in the last part of 2020.
Okay. This is more around live events. So another program. What businesses adjacent to the events industry qualify for the live venue grant program? Is it ticket sellers, parades and festivals, performers, sporting venues, etc.?
As a general matter, very few, if any. So the statute is pretty specific in what it spells out. Those live events programs, the talent managers, museum operators, theater operators, and you have to meet very specified criteria. So the live performances that you put on can't be incidental to your business. In fact, you have to generally generate something like 70% of your income from the ticket sales or the admission charges for that live event. So if you have, a restaurant bar and you have bands playing and you make a little bit of money from selling tickets or charging a cover charge on nights where the band plays, unless that is a 70% or more of your business, and you also have light riggings and microphones, and you do advanced promotion and ticket sales, you're not going to qualify for the live venue grants. And so, the SBA, as I mentioned, is beginning to put information online about the qualifications. But as a general matter, you have to be in that live events business in order to qualify.
Okay, so very specific. Makes sense.
It gets down all the way into, do you have light rigging and do you have audio visual equipment? And so,
wow.
Sadly, a guy in a guitar, performing, on a little stage in the corner just doesn't cut it anymore, at least for this program.
Right. Well, we all looking forward to when we can go and enjoy such things again, so that's
exactly
on the other side of this. So, okay. Next one is, our company has 2 locations, but just one of them is in a location that qualifies for the targeted EIDL grant. Would we qualify for the program?
Great question. And I wish I could tell you, give you an absolute clear answer. It's one of the things that we're looking for from SBA when the program reopens, and some clarification on. So I hope the answer is yes. I think based on my reading, the answer should be yes. But again, this is something that we're going to want to fully understand once we get the additional guidance and once the program is reopened.
Okay. Now let's shift gears to some do I qualify questions. A lot of the audience in previous ones have asked for very specific cases. So I'll fire some across and you can let us know. Can landlords qualify for PPP loans?
So, well, if your income is just rental income from renting a business, probably not. If you have if you own a company, you have a small business, and you manage that property, and you take that as earned income, or you have a handyman, or you that maintains the properties, or you somehow have other employees that are tied to that, you will have payroll expenses or self-employment expenses for which you can qualify. But if you don't have any of those things, if you're simply receiving rental income, then you're unlikely to qualify because you don't have the wages or salary income for which to qualify.
Okay. Now, another one, will sole proprietors benefit from the new stimulus bill?
Absolutely. So sole proprietors, independent contractors, you are eligible for the PPP program and the second draw PPP. So if you Schedule C, line 31, you claim income from that, from your self-employment, you qualify. and you can help offset some of your, you can borrow based on your earnings there. Generally, sole proprietors can also now apply for the EIDL program and receive an EIDL loan. In some instances, the self-employed may also be able to qualify for that employee retention tax credit.
That's great. So really, a lot of the programs actually have options for sole proprietors. That's
right.
great. So here's a specific one. What if your income was up for a quarter because you received a grant, but you will not get that, obviously, that grant again? How does that affect things?
Yeah, I want to take that question. I want to break it into three parts, so I want to be really clear, because this is really important with respect to second draw PPP loans. Let's first start with, does your PPP loan that's now been forgiven count as income or towards your gross receipts in terms of meeting the 25% reduction in gross receipts test? It does not. So your PPP loan that's been forgiven, normally that would count as income. It does not for purposes of the second draw PPP. The same is true of the EIDL grant. That doesn't count either. Now, if the questioner received maybe some grant from the state government or a local government, that's less clear, and the SBA has not opined on those. But there's a second related part of that question I think is really important. The test for qualifications for the second draw PPP is not a 25% reduction in gross receipts in every quarter of 2020 relative to the same quarter in 2019. It's in one quarter. So let's say that your business had a 30% decline in gross receipts in the second quarter of 2020 compared to the similar quarter in 2019. But in the third quarter, your reduction in gross receipts was only 20% in 2020 compared to the same quarter, third quarter, in 2019. You still qualify because in one quarter in 2020, you had a reduction in gross receipts of greater than 25%.
Gotcha. Okay. That's a lot of very good information for folks to really see the differences in what counts and what doesn't count. Here's another one. If a business has closed down within the past 2 months, are they eligible for the new stimulus?
So if you've permanently closed, you've shuttered your doors, you're not reopening, no. The loans, the grants, they are for ongoing concerns. If, however, you've had to temporarily close your doors, but you anticipate reopening, or you're still an ongoing concern, you've shut down dealing with customers for the time being because of the economic situation, you likely do continue to qualify. Now, your qualifications for some of these programs are going to be based on some of your payroll expenses that you've had. And if you've been shuttered for 6 months or 9 months, your qualification might be a lot lower because you don't have those payroll expenses. But in general, if you're trying to keep the business going, if you're trying to get employees back, you would qualify for this. But if you've closed permanently, no, you do not qualify for these programs.
Okay. Here's another one around business. This is the other side. I started my LLC in May 2020. Am I eligible for any of these loans based on my business start date?
That's tough. So most of the programs do require that you are in existence. Generally, February 15th, February, I believe it's 29th or 30th. I can't remember if last year was a leap year. 29th, I guess.
29th, yeah.
Yeah.
I think it was, yeah.
Of 2020. So if you started in May of 2020, it might be difficult. There may be some ways to qualify if you have employees for the employee retention tax credit, though I want to double check that. But in general, PPP, et cetera, no, you had to be in existence in February of last year.
Okay. Now let's switch from questions from past events to questions from today. For the audience, I know everyone's already been putting lots of questions in. Please continue to do so. As I mentioned before, as the questions are published, be sure to put a thumbs up on the questions that are most important to you, and we'll do our best to answer the most popular ones. And just a reminder, we've actually gotten thousands and thousands of questions, even for each event. So we're working really hard behind the scenes. There's a group of people going through all the questions, trying to find common themes so that we can answer as much as we possibly can for what your great concerns are. So, Neil, let's go to the questions from today. So, one that we kind of covered before, so hopefully it's not too duplicative, but this one is a slight nuance, I think. It says, if I had a first round PPP loan and also got an EIDL loan, can I apply for a second round PPP as long as I meet the criteria?
You can. There's no prohibition against that. And if you happen to get your EIDL loan, basically between early January and the end of February of last year, of 2020, you actually may be able to roll that EIDL loan over into your PPP. But let's assume you didn't. Let's assume you got the EIDL loan after that period. You can absolutely take an EIDL loan and receive a first draw PPP and receive a second draw PPP as long as you meet the other relevant criteria for eligibility. Okay.
That's good. That's great to hear. What is another around PPP? What is the deadline to file for forgiveness for an original PPP loan?
Great question. I'm trying to remember there is a deadline. It's generally up to 10 months after your covered period ends. So I'm not sure why someone would want to wait that long, but there is a deadline that if you wait too long, you will have to start paying interest and ultimately at some point principal back on that PPP loan. So it's a pretty extended period. You do have a fair amount of time after your covered period ends, but my advice would be don't test it. Don't even wait anywhere close to that long.
Right. Just get it done as quick as you can and move on. Right. So. Let's see, another good one is, are owner wages eligible for an employee retention tax credit?
They can be. And so you're going to want to, the IRS has provided some guidance for self-employed individuals, assuming the questioner is self-employed, and they're trying to take advantage of it there. There's also guidance for calculating, obviously, if you're the owner and you're paying yourself wages, those will qualify just like wages paid to other employees. Okay.
This is one, are there any grants, not loans, available for startup businesses? It says, because of COVID, the launch date of my business, this is the same question as before, I apologize. Because it says, because of COVID, the launch date of my business keeps getting pushed back. So he hasn't, I think, officially started, probably.
Yeah, so there's no special COVID-related kind of startup grants. In the same way that if you were starting a business kind of pre-COVID, you might want to check around for eligible benefits either from your state or the locality in which you're in, or something else. But in terms of the relief packages passed by Congress, no, there's no special kind of startup grant.
Okay. Can you describe in detail what other costs are covered other than payroll for, I'm assuming they mean more for PPP.
Yeah. Yeah, so, okay, let's go back to the original program. So the eligible costs include your payroll expenses, your rent on your business, your interest on a mortgage associated with your business. So let's say you own the property and you're have a mortgage, the interest that's associated on that mortgage, your utilities that you pay. So electric, water, cable, internet, those things qualify as eligible expenses. In addition, the most recent law expanded the eligible expenses to include 4 additional categories. Perhaps the most important of those additions was pandemic public health and safety related expenses. So let's say you bought plexiglass to create dividers between your customers and your employees, or between employees. That is an eligible expense. Let's say you created a drive-through window for pickup that didn't previously exist. That is an expense that now qualifies for forgiveness. In addition, certain of your operating costs relative to financial management and HR. For example, software that you might buy to help keep track of all of these expenses for purposes of your PPP loan, that expense now is a qualified expense. Certain supplier contracts that you have entered into, particularly if you've entered into them before you received your PPP loan, or if it's for a perishable good, i.e. you're a restaurant and you're buying, fruits and vegetables and meat and dairy and those things that's essential to your business, some of your supplier expenses can now qualify as qualified expenses. And if in 2020 your business received damage as part of the civil unrest that we saw in many cities, and some of your damage wasn't covered by insurance or otherwise compensated, those expenses. That said, the 60-40 rule remains in effect. And the 60-40 rule says that of your total loan forgiveness, at least 60% of it has to be for eligible payroll expenses. So to make this simple, if you had a $100 loan, in order to get the full loan forgiven, $60 has to be for your payroll costs, and not more than $40 can be for all of those other things: rent, utilities, supplier costs that I just talked about. If on that $100 loan, let's say $45 or $50 of it is for non-payroll related expenses, you will receive proportionately less in terms of your overall loan forgiveness, meaning that you'll have an outstanding balance that you have to pay. So while these additions are really important, remember at the end of the day, what drives your loan forgiveness is really your payroll expenses, supplemented by these other additional costs.
Got it. So the businesses really need to focus on the 60% being applied to the payroll side, and the 40 is for all the other items you're discussing.
You do, and you're going to want to think through how you everyone's goal is to maximize their loan forgiveness. You want to get the full amount of the loan forgiven. And so that means that you both have to focus on your payroll costs, but take advantage of these other things to make sure that you get to 100% of your loan. But if you try to get to 100% of your loan just by focusing on these unrelated non-payroll expenses, you run the risk of not hitting that 60%, and then you're going to lose some of your loan forgiveness.
Right. Yeah. Okay. Switching gears to let's see, what is the deadline to file for an employee retention tax credit for 2020, and when should you file for 2021?
So in general, you're claiming the credit when you file your quarterly statement with the IRS for your payroll withholding. And so for the fourth quarter of 2020, most employers file that by the end of January of 2021. I think there's something like a 10-day grace period normally as well. So you might be doing it at the beginning of February. Again, this is one of the reasons we're really anxious for this guidance from IRS. Then otherwise, in general, it is when you file your subsequent quarterly reports. So it'll be the report that you file for Q1 of 2021, and then the report you file for Q2 of 2021. Importantly, this tax credit is only available or sunsets at the end of Q2 of 2021. So it will only cover your payroll expenses through the first 6 months of 2021. I'll note just also, we've heard concerns, and I agree that the forms can be a little bit complicated. But if you don't want to wait until you file your quarterly return to take advantage of the tax credit, you can apply to receive advance and get an advance on that tax credit so that you can get the money back from the IRS, assuming your tax liabilities, your tax credit exceeds your liabilities, where the IRS sends you a check. So if there's a real cash crunch in your business and that's something you want to look at, you're going to want to talk to your tax preparer, your bookkeeper, whoever does your payroll, about applying for and filling out filling out the form to receive the advance on the employee retention tax credit.
Gotcha. So it's always nice to get a check from the IRS.
Yeah, it's one of the reasons I'm so big on this, right? How often does the IRS send you a check?
Exactly. It's take advantage of it when you can, right? Another question about one of the other programs. Do you have to meet all 3 parameters for the EIDL grant, or is it sufficient to meet any one of the 3 criteria?
No, you have to meet all 3. The 300-person, the location and a new market tax credit, census tract, and the reduction of at least 30% in gross receipts over an 8-week period.
Also on the EIDL, do we know, does any date for when the EIDL will open? Did we cover that already? I can't remember. I think we don't know.
We hopefully, knock on wood, any day now, but I don't have a firm date.
Okay. Another date question on the live venue grant. Same thing, I'm assuming. We're just waiting to hear.
We're waiting to hear. And so, the thing I would encourage people to do, go to sba.gov for both of those programs and find the portion. There are specific sub pages, one dedicated to the EIDL grant, one dedicated to the shuttered live venue grant program, and just make sure you're checking those on a regular basis for their updates.
Makes sense. If we received part of an EIDL advance, do we need to meet the new criteria, reduction in revenue, located in a tax credit tract, to apply for the balance?
Generally, yes. There's some open question about whether or not, after they've funded all of those, whether other people who don't meet the criteria might be able to receive it. Although I think this is more of an academic discussion because there's about $20 billion, and I suspect it might go quickly.
Gotcha. Okay. Going back to the PPP side, I'm particularly curious about the criteria for applying for a correction to the first PPP loan. Client applied using net wages in formula instead of gross. Do they qualify for an increase to the first PPP?
So there are some provisions in the law that allow people to go back and correct and receive additional amounts, particularly as a result of changes in the law. In this instance, it sounds like a situation in which the applicant the borrower made an error. I would want to go talk to my lender about whether there's any possibility to correct that, either with respect to getting an increase in the original PPP loan, or assuming that the borrower qualifies for a second draw PPP, and you've already exhausted the first draw, you might just want to focus on the second draw PPP. So, but that's a conversation I'd want to have with my lender to figure out what my options might be there.
Okay. Here's another nuance that I hadn't thought of before. It says, are state grants considered gross receipts for the purpose of the 25% reduction calculation?
Yeah, so one of the things that the SBA regulations do is they provide a specific carve out for forgiven PPP loans and EIDL grants so that they don't count as gross receipts. There is a fairly detailed gross receipts test that is in existence in SBA regulations. What I would suggest doing is I'd want to, because my fear is that it will count, but there may be some exceptions to this depending on the type of grant that you received. And so I would get the information about the type of grant. I would go look at the SBA regulations on gross receipts. Just Google SBA PPP second draw 25%. The interim final rule has that. We'll pull all this together and also get links at uschamber.com and check that out. But again, I want to go back to how I answered a similar question earlier. Remember, the test is not on 25% reduction in gross receipts in every quarter. The test is in any single quarter of 2020 relative to the same quarter in 2019. So if you got a state grant, let's say in the second quarter of 2019, but in the third quarter, in 2020, but in the third quarter of 2020, you still experienced, you got no grant, and you had a reduction in gross receipts of 27% compared to the third quarter of 2019. So third quarter of 2020, 27% drop compared to the third quarter of 2019. You qualify and you don't have to go figure out this question about whether it counts as gross receipts. And so, I think that is may save a lot of people a lot of research and heartburn just to know that all you got to do is find one of those quarters where your gross receipts are more than a 25% reduction.
Yeah, that's really a great clarification for the fact that it's quarter to quarter between 2019 and 2020, right? So that hopefully will help that person with the state grant question. This is one that we touched on it earlier, but it looks like it's been a very popular one again today and has been in our last couple of months. If you already got a PPP loan, can you also get tax credits?
Can you also get the employee retention tax credit?
Correct.
Yes.
Sorry.
Yes, absolutely you can. The only limitation, this is an important one, but the only limitation is that you can't claim PPP to pay for the same payroll costs that you're also receiving employee retention tax credit. So let's say that you're getting a PPP loan, you're going to use it in February of this year, and you're going to use it to pay your 2 employees. You can't at the same time claim the employee retention tax credit for those wages for which you use the PPP program. Now, let's assume that you get your PPP loan and you're using it to pay the wages of your 2 employees in February. But by the time we get to April, you've exhausted your PPP loan, but you're continuing to pay your employees. Now you can claim the employee retention tax credit to help offset the cost of paying your employees now because you're no longer using the PPP proceeds. So the simple rule I like to remind people is virtually in all of these government programs, you can't get $2 for the same $1 of expense. So you can get $2, but it has to be for $1 of expense and a separate $1 of expense. If it's the same $1 of expense, the government looks mighty poorly on that. And so just make sure you're keeping track, making sure you're planning how to use your PPP and your employee retention tax credit.
Okay, great clarifications all around. Here's a specific one of which is very fitting for right now, how everybody's gone virtual, is are cloud computing expenses required for your operation covered as expenses?
They can be towards that eligible expenses on the PPP. So yes, to the extent that they're related to tracking these type of things, yes, they could be eligible. That could be an eligible expense for your PPP loan forgiveness.
Gotcha. This is another one around what qualifies. How about costs for cleaning and disinfecting? Is that a qualified expense for PPP now?
Yeah, you can have some operating costs for enhanced cleaning and those type of things. And obviously the cost of things you've procured for that, that can count to the extent that you're implementing, these public health and safety measures and recommendations.
Okay. Here's a specific one on a seasonal business. It says if the seasonal business is able to increase their first PPP loan due to regulation changes, can that money be applied to past expenses so we can apply for a second draw PPP also?
Yeah, so this is an area that has some complications to it that, again, guidance from the SBA is going to be really important. So the instances I'll tell you that I worry about and what I'm looking to see in the IRS guidance, and as of what had been published so far as of last night, I really hadn't seen a good answer to this question. Is you're exactly right. You had a loan. The regulations have changed. You can get an increase in that loan, but your cover period's expired. How do you count that? Can you go back and count other expenses that you had and offset that and qualify that for forgiveness? That would seem the most logical way that it would be applied. And that would also clear the way for applying for the second draw PPP. But until we get further clarification on that, I can't say for certain that that's the way it's going to be applied. And this is something that we're just looking for further information on.
Okay, that makes sense. We're getting some really great different use case scenarios for many of these businesses. Here's one that says our chamber, and I assume their Chamber of Commerce, is in a building in which we are one of 4 condo owners, in quotes. Are condo dues part of eligible expenses for a PPP?
So that's a great, they've stumped me here. So it's not rent. That's a good question. I don't know. So it's not rent. Okay. It's not interest on it's certainly not interest on your mortgage.
Right.
That's a good question. If it's a condo fee that is separate from your rent, does that qualify? And I'm not recalling where the SBA has ever opined on that. I will say it won't make a difference whether you're a Chamber of Commerce or not. Whatever the rule is going to apply to everyone. But I'm not sure I've ever seen SBA opine on condo fees for businesses.
Yeah, I get the guest host award where I was able to no one can stump Neil. Neil's knows all of this stuff. So, well, I can't take credit. That was one of our great audience questions. So, okay, back to the ones. Let's see how many more we can get in before we finish up. Can you get the EIDL grant again if you already got it the first time? I think we covered that, but just to make sure.
No.
No. Okay. So it's one time. Gotcha. Let's see. I'll find a good one here. What date is your employee count measured? That is specific date in 2020 or the day that you apply for the PPP?
Yeah, for your employee count, you're generally looking for the period in which you're calculating your loan, your payroll expenses. And so, if I suppose it may be a person they were at 505 and now they're at 495 in a situation like that. You're going to want to, and I don't recall in the loan application if it exactly specifies. I can tell you what you are going to want to do is be consistent kind of across the form in both when you're claiming the payroll expenses and when you're claiming the employee headcount.
Okay. And this is more, we touched on this a little bit earlier too, but it says, how does partial forgiveness work?
So partial forgiveness is that, you had a $200,000 loan. You had, let's say, $170,000 of it forgiven. You have a $30,000 balance on your loan. It's under the original terms and conditions in which the loan was made. In general, that's a 1% interest rate. So pretty good interest rate on the loan. And it's a term of, depending on when you received your loan, of either 2 or 5 years.
Okay. Let's see. If you exhaust the PPP before 8 weeks, can you apply for forgiveness earlier than 8 weeks?
Generally, no, because your covered period, even though you may have exhausted the PPP, your covered period is statutorily required to be between those 8 and 24 weeks.
Gotcha. 8
So
and 24.
you can cut it off at 8 weeks, but you can't cut it off at 6.
Got it. Okay. Let's see. Let's do. Already got that. Is there anything else on sort of the live venue grants? I think covered that pretty well earlier. Gotten a few different ones on the application being available, but I think that, and it has some very specific guidelines, obviously.
Let me say one thing about this. I think it's important for folks who think they may qualify for a live venue grant. This is one of the few places now where you can't take both a PPP loan and the live venue grant. So unlike now the employee retention tax rate where you just can't take it for the same expenses, in this instance, if you go and get a live venue grant, you give up the possibility of taking a PPP loan.
That's really good to know. So basically, if you go that route of the live venue, then you're not able to go the other avenues.
You're not able to go the PPP route. That's exactly.
PPP. Okay, gotcha. Well, great. I think we've reached the end of our time. Neil, I greatly appreciate all of your expertise and also having a guest interviewer. Jeanette will be back for our next one, but it's been great to be here and talk with you.
Thanks, Mike. Yeah, really appreciate it. And thanks to the audience for some great questions. We'll keep working on the ones we didn't get to, and we'll try to adjust our guides and the things that we produce to reflect your questions.
That's a really valid point, and we're updating content on both uschamber.com. You also on the code site itself. There's a lot of great articles aimed at helping you really get through this and come out better on the other side as a business. To the audience, again, from my standpoint, thank you for joining us. Thanks for all the amazingly detailed questions. Really gave us some different specifics that will be very helpful to everybody. We're really glad you made carved out the hour in your day, and we hope to see you very soon. Thanks again.